One of the ways that I know we are still early is that every time something horrible is in the headlines, the price of Bitcoin drops. This is fundamentally opposite of what should be happening. Bitcoin was birthed by crisis and released into chaos as the solution to many of the world's problems, not something simply to be enjoyed during the good times. And until this dynamic changes, you can rest assured that we are still early.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, Buenos Dias, Morgen, and welcome to episode 258 of the Bitcoin Bulletin Podcast. I am your host, Chris, and as usual, I'm coming to you from Florida's beautiful Space Coast, and proudly once again back in the Bitcoin Bulletin Podcast studio. Last week, as you know, I had a bit of a medical emergency, and so the last episode was a little abbreviated, but fear not, plebs. I am feeling a heck of a lot better this evening and just chomping at the bit to get into it. So without further ado, let's get into it. As I alluded to in the introduction, one of the ways that I always thought that you could tell that we are still early is that Bitcoin sells off whenever there is bad news. This weekend, after the traditional markets were closed, the United States and Israel, of course, started their attacks on Iran and the now ongoing Iran war. And Bitcoin sold off dramatically. Stock and ETF holders had to sit and wait and see what would happen for several days until the markets finally opened on Monday morning. And of course, when they did, the markets went down. But this is the tried and true story. Bad news happens. Bitcoin sells off while the markets are closed. Then, of course, Bitcoin goes on to recover before the traditional assets as well. But the larger point here is that Bitcoin was made for conflict, not necessarily war. Bitcoin makes war unaffordable, but specifically, Bitcoin was created so that nothing can stop it. TikTok next block, as they say. And this is encoded into the very essence of Bitcoin, and even memorialized in the very first block, the so-called Genesis block. And we all know the quote, "Chancellor on brink of second bailout for banks," that's encoded in the Genesis block. But have you ever paid attention to that front page itself? Literally, right above that headline was a picture of Israeli troops entering Gaza. Bitcoin was born of chaotic times, because of chaotic times, and designed to thrive despite them. In the future, people will realize that during times of crisis, they need Bitcoin more than ever. And if anything, this should pump the price. And until that is the case, you know that we are still early. All right. It feels really good to be sitting back here in my chair in the Bitcoin Bulletin Podcast studios, with the minor exception that one of the issues that was brought to light was that I have a couple of fractures in my L5 vertebrae, and that's bugging me a little bit. So hopefully I don't squirm too much while I'm sitting here trying to record, because one of the things about making reasonably professional sounding audio is you gotta stay reasonably close to the same spot as far as your distance from the microphone goes. We're not a big fancy pants podcast with producers, etc. So it's just me. I'm sitting here in the studio. I am running the soundboard, and I'm doing the whole enchilada by myself. So got to try and keep my distance as close to the microphone as possible, so I don't spend all night fiddling around in Audition trying to normalize the different sound levels. But again, I'm getting wildly off base here, wildly distracted. So before we get into the news, let's go ahead and take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of block 939,344. And plebs, Bitcoin is ringing in at a whopping $72,770 US. I know if you compare that to the all-time high of $126,000, or even just to that $100,000 threshold, it seems like Bitcoin is still crashed, that we're still in the depths of the bear market. But plebs, we're up almost $5,000 from last DCA Wednesday alone, and significantly higher from that $62,000 mark. I mean, that's 10,000 up from the $62,000 that Bitcoin was hovering around just not that terribly long ago. In fact, Bitcoin is up 6% today alone. And earlier this afternoon, I saw Bitcoin popped briefly above $74,000. So as it stands, I mean, we're talking what I said, almost 4,000, almost 5,000, $4,840-ish higher than last DCA Wednesday. And it's the highest price that we've seen on a DCA Wednesday episode since back in January, back when Bitcoin was still in the $90,000 range. So even though it seems like if you've been death staring at Bitcoin's prices and doom scrolling on Twitter on a minute by minute basis, it looks like the world was ending. The 58K gang was getting their pom-poms ready and getting ready to emerge onto the field. And then here we are back at 72,000. Who knows whether this bear market has bottomed or not? I have reason to believe it probably has not. But the point being, Bitcoin is still worth $72,770 for Bitcoin, which is a number that was just completely unimaginable to me. It wasn't unimaginable. I mean, I figured Bitcoin was going to hit 1 million one day easily. But the point being, back in the teens, say 2016, when Bitcoin was bumping around, the $1,000 mark, that $72,000 Bitcoin was a pipe dream back then, and not too shabby right now, unless of course you're a noob and you just aped in at $120,000 or more, in which case, yeah, it probably hurts, but it won't for long. This too shall pass, as they say. Bitcoin's current price at $72,770 means that every fiat cuckbuck that we convert to Bitcoin today will score us 1,374 sats per dollar. That is that's almost exactly 100 sats per dollar fewer than last DCA Wednesday. So that is the side effect. That's the catch-22, or the flip side of the coin of the price of Bitcoin going up. It means we're going to get fewer sats for our US dollars, but we're still getting above 1,000 sats per dollar, which is that threshold that will cross when Bitcoin retakes 100,000 US dollars. And so that makes me happy. I mean, think about it. One day, and this might be far off in the future, and some of us might not be here to see it, but one day we will be at the point where one Satoshi and $1 are the same value. It's dollar sat parity. And when that happens, right now, every dollar we're converting into Bitcoin will be worth 1,374 US dollars. Seems absolutely insane, but remember, plebs, there was a time when you could go to a Bitcoin faucet, and just for going to a web page, they would give you 5 Bitcoin, because 5 Bitcoin was worthless at the time, and they wanted to spread Bitcoin to as many people as possible. So for just going to a website, they'd give you 5 Bitcoin. Now, for just converting $1 US, you get 1,374 sats. And I firmly believe that within our lifetime, that will be the same kind of feeling. Like, I can't believe I got 1,374 Satoshis for just $1. That's another reason why we're still early. But I digress once again. Back to the vital statistics. Bitcoin's current price means it has a market cap of 1.46 trillion US dollars, trillion with a T. That is up more than 100 billion US dollars since last DCA Wednesday. Obviously, still far below the $2 trillion market cap we kind of got used to when Bitcoin was bumping along above $100,000 for such a record stretch of time. I mean, people talk about this bull market maybe being disappointing because it didn't go to 150 or 250 or 500,000 US dollars. But plebs, we got above $100,000 and we stayed there a really, really long time. Just go look at some of the charts of the previous bull runs, and they look like a ballistic missile or a javelin. They go straight up and straight back down. There's not this big long plateau of Bitcoin doing really, really, really well and then the bear market. So that's one subtle way that this time was maybe a little bit different. As they say, history doesn't repeat, but it rhymes. And again, another tangent, but sooner or later we'll take that $2 trillion Bitcoin market cap back, and then we'll take a $5 trillion market cap and a $10 trillion market cap and a $20 trillion market cap, and we'll be looking back at $2 trillion as nothing. I mean, if Bitcoin ever crashed back down to $2 trillion market cap, people would be crying. So again, a tangent. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 17.3 ounces of gold to purchase just one Bitcoin. Now, plebs, gold is at yet another all-time record high. The price of gold spiked when all the other markets were tanking on the news of the Iran war also. But despite the fact that gold is near its all-time record high and significantly above where it was last week, you still need a full 1.2 ounces more of gold to purchase just one Bitcoin, because even though gold is rallying in US dollar terms, it is trending to zero in terms of Bitcoin. Something that if you zoom out far enough, it should be obvious, because gold has had a pretty good rally recently. But if you look at the overall picture, I mean, it wasn't that long ago when we were happy to break when we were celebrating the fact that it now costs more than a pound of gold to purchase just one Bitcoin. And then we went up to 2 pounds of gold, and we were closing in on 3 pounds of gold to purchase just one Bitcoin. Then of course gold just went on its once in a lifetime tear, something that it hasn't done in most people's lifetime, something it hasn't done for more than 50 years. And that kind of skewed things for a little bit. But now things are trending back to normal, and this week alone, it's going to cost you an extra 1.2 ounces of gold to purchase just one Bitcoin. And gold bugs, mark my words, this is the sale you don't want to miss out on. Is it possible that maybe you might be able to score Bitcoin for 15 or 16 ounces of gold at some point in the next couple of months? Maybe, but in the long term, your gold is just going to be a shiny yellow rock when Bitcoin takes over when Bitcoin becomes the financial system, not just a financial system. For those of you who value wealth in something a little more tangible than gold, I know Gold Bugs and Peter Schiff like to say that Bitcoin has no intrinsic value. Gold is tangible. You can hold gold in your hand. Well, of course you can hold gold in your hand, but that's not why gold is valuable. Gold's valuable because it's pretty, and yeah, we can use it in some electronics, but it isn't worth $5,000 an ounce because it conducts electricity really well. It's worth $5,000 an ounce because people are hoarding it, and because people have liked it for thousands of years. Kings and royalty have worn it because they thought it was shiny and eye-catching and made them look important. That's not intrinsic value. Intrinsic value is that you can make a payment anywhere to anyone in the world and nobody can stop you. That king can't kill you and take your Bitcoin and use it to fund a war, with the neighboring country, or with a rival king somewhere. Something that's tangible is pizza. You actually can eat pizza. Pizza can save your life. If you're starving, pizza is going to be pretty important to you. And right now, one Bitcoin will purchase you 4,069 large pepperoni pizzas from Papa John's. If the shit hit the fan, I would much rather have those 4,069 large pepperoni pizzas than 15 shiny yellow rocks. I can tell you that for sure. What that means, plebs, is if you tried to spend a whole Bitcoin by purchasing one pizza a day, it would take you more than 11 and a half years. That is more than 3 halvings from now. And of course, we know that the price of Bitcoin traditionally has gone on epic tears in the year to 18 months after each halving. So it's reasonable to assume that's going to happen again, which means well before you get to that 11 years from now, when you'd be running out of sats by eating your pizza, the price of Bitcoin is going to outstrip the price of pizza. Just like gold is trending to zero in Bitcoin terms, pizza is trending to zero in Bitcoin terms. You don't have to look any further than the first real world purchase that was ever made with Bitcoin. And that's back in 2010 when Laszlo Hanya bought 2 pepperoni pizzas, or 2 Papa John's pizzas, for a whopping 10,000 Bitcoin. And now we're getting rapidly to the point where it's going to be 10,000 pizza per Bitcoin, which is, people talk about the flippening. That's going to be the flippening when we get to the 10,000 pizza per Bitcoin instead of 10,000 Bitcoin for one pizza order. But once again, I digress. That metric that has been my favorite metric the entire history of this podcast is Bitcoin's 24-hour average transaction rate. Plebs, it's still scooting and booting, coming in at an average of 4.5 transactions every second. And that is down from last week when we were looking at a whopping 5.74 transactions per second, but still well above that threshold of 3.14, 3.15 transactions per second that we saw indicated really, really healthy Bitcoin adoption. And even that doesn't include Lightning. I mean, last week we spoke about We spoke about the news that the Lightning channel had crossed the $1 billion in transaction threshold, that 5.2 million Lightning transactions happened. I think they were talking about the month of November, so it was an old stat. It's getting even better, but 5.2 million of those transactions in November were not included in that on-chain metric because it takes an on-chain transaction to open a Lightning channel and close a Lightning channel. But once you open a Lightning channel, if you're running your own node, something that doesn't concern you if you're using a custodial Lightning wallet, but if you're a hardcore pleb and you're running your own node and your own Lightning node, you open a channel or two, and that's it. You never have to close those channels. From time to time, you might close a channel to open it, or your channel partner might just disappear. They might stop running their node, and so you close the channel and open a new channel, or rebalance your channels. But in general, you don't have to. If you have a couple of good Lightning channels, theoretically, they could last forever, and that would mean that you'd only ever involve one on-chain transaction for the millions of transactions that you might make over your Lightning channel. And so that's pretty exciting that we have 4.55 on-chain transactions every second, not even including when I went to Steak and Shake and bought the America 250th anniversary milkshake and a Bitcoin burger and tallow fries. Speaking of the on-chain activity, though, the mempools, well, again, we're getting a diverging story. Clark Moody's dashboard is showing their mempool has basically the same number of transactions that it did last week. Last week, there were about 2,094. I think it was 2,094 transactions in their mempool, and right now there's 1,957. So materially the same amount, because things that affect the number of transactions in the mempool when it's that empty, it's more the time between blocks necessarily than a week over week comparison. So functionally, statistically the same as last DCA Wednesday. Mempool.space, on the other hand, their mempool's almost tripled since last DCA Wednesday. Last Wednesday, they had 12,260 transactions in their mempool, and now they have 32,173 transactions. So what's the difference? Well, the difference is Clark Moody's mempool is an old school, old-fashioned mempool. It doesn't include all the spam transactions, and how you know it doesn't include the spam transactions is most of the spam transactions are spending less than 1 Satoshi per VByte to get mined. They're doing it on the ultra cheap. And most old school traditional mempools will not even include any transactions that have a fee of less than 1 sat per VByte. So that's the breakdown. Mempool.space is including any transaction, whether it's a tenth of a sat per VByte or what. And the difference is basically 2,000 transactions or 32,000 transactions, which means you have 30,000 mostly spam transactions in mempool.space's mempool. And that should be a wake-up call for you if you're sitting on the fence on how you feel about the spam debate. Fortunately, though, since they're all a bunch of cheapskates, it really isn't affecting the price, what it's going to cost you and I to do an actual monetary transaction on the Bitcoin network, despite all those spam transactions waiting in line. It'll still only cost you about 1 Satoshi per byte, which is the old school minimum that you could even send for an on-chain transaction. Looking back at the last several transactions, last several blocks, last 3 blocks in a row all included, the last block included a fee of 0.2 sats per VByte, the one before that 0.3, the one before that 0.2. So basically any non-spam transaction where you include a full 1 sat per VByte transaction is going to be mined in the very next block. That is pretty incredible. Mempool.space, their fee estimator is probably a little skewed by the fact that there's 32,000 transactions pending in their mempool. They're trying to say it'll cost 2 sats per VByte to guarantee you're in the next block, something their own data doesn't hold, because I just showed you that 1 sat per VByte would have gotten into the last 3 blocks. That aside, even 2 sats per VByte is really, really cheap considering the economic power that you hold. Like Barack Obama, and he didn't mean this as a compliment, he meant this as an insult. He said that a Bitcoin wallet is like having a Swiss bank account in your back pocket. And he was right. I mean, it is. You're not just holding money on an app. You're literally holding a financial system on your phone in your back pocket. Now, he meant that as a bad thing, because if you're a progressive, you're the foundation of your beliefs is that you need to tax people, and then you need to redistribute that money. You take from the poor, the wealthy to give to the poor, etc. You have to have money to spend on all these social programs. And he didn't like the fact that you could have money in what he was calling a Swiss bank account, which he was referring to the fact the old numbered Swiss accounts where they were anonymous and you could just hide money and nobody would ever know you had it. And he was saying that Bitcoin was like that. And he had a problem with that. So what I'm getting at is you are wielding functionally the equivalent of an old school Swiss banking system in your back pocket. And you can do that. You can move your money around an unlimited amount of money for just 2 sats per VByte. And for the average transaction, when you add up the inputs and the outputs, the amount of data that it takes, that means you're going to spend about 16 cents in US dollar terms. 16 cents, and you could move $1 billion to a country that is in the middle of well, you could send $1 billion to Iran. I mean, you could probably get arrested for it if the government found out you did it, but they couldn't stop the transaction. And that's the larger point that I'm making. And to be able to do that for 16 cents is amazing. Imagine trying to smuggle $1 billion of the gold into Iran right now and how expensive that would be if you could even pull it off without getting shot down or blown up. Pretty amazing. I mean, you can't even mail a postcard for 16 cents. All right. We have not had a difficulty adjustment since the last Bitcoin Bulletin podcast. We're getting really close. I'm getting a bit ahead of myself. So one of the more genius things I think about Bitcoin is the way that it seeks to keep transactions coming in at a steady, regular basis of one block of transactions every 10 minutes. And how they do that is by adjusting the difficulty, because obviously, as Bitcoin becomes more valuable, more people started mining Bitcoin, and more computers and more powerful computers started trying to compete to get the next Bitcoin block. And that would mean that blocks would get solved faster, right? Well, yes, until the difficulty adjustment. The difficulty adjustment's entire purpose is to keep those blocks coming in once every 10 minutes. So if they're coming in faster, it makes it harder to mine, and that slows them down to keep them in line with 10 minutes. If something happens where miners shut down, which happens from time to time, then it makes it a little easier to speed those transactions up. And the next time that's going to happen is 112 blocks from now. It does so every 2016 blocks, which works out to about once every 2 weeks. But again, that's 2016 blocks. And so that how long that takes is totally based on how fast the blocks come in. It's not tied to a specific human time frame. In general, it works out to about once every 2 weeks, though. And so sometime probably tomorrow, well, definitely tomorrow, because we're not going to get 112 blocks mined in the next couple hours. So sometime in the early part of tomorrow, it looks like, that'll be March 5th, we're going to have another difficulty adjustment, and it's going to be a slight decrease in difficulty. Last week, it was looking like it was going to be another difficulty increase. We had seen a couple of months ago, especially with the cold weather and the miners agreeing to shut their miners down in Texas to let that electricity flow to the grid, we saw hash rate taper off. And as a result, we had consecutive, 1, 2, 3 in a row difficulty decreases. And then all the miners turned back on because the weather got nice again. And then all of those decreases got made up for in one fell swoop with a gigantic difficulty increase of 14.7% about 2 weeks ago. And it was looking like we were going to have another difficulty increase, but that has tapered off a bit. So it looks like we're going to have a small decrease of about 0.6 to 0.7% tomorrow morning or tomorrow afternoon. And the reason for that is that over the 2016 block period, which is almost done, blocks have been coming in a little too slow. Not that much, pretty darn close, actually. The current average over this last difficulty epoch is 10 minutes and 4 seconds. But 10 minutes and 4 seconds is slower than 10 minutes. And so that would be, if that continues to happen, if something doesn't happen to where the next blocks all come in so fast that it speeds up that average, that we're going to have a very small increase in mining difficulty, which means absolutely nothing to the normal pleb out there, the average pleb that isn't mining. If you are mining, it means that you might get 0.5 or 0.6% less profitable, based on any given hardware. If you're running old hardware and you upgrade your hardware, well, that's going to change your profit way more than the difficulty goes. But if you're running a specific miner today and the difficulty increases 0.6% tomorrow, in theory, it'll be 0.6% less profitable. And that's all that means. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to contribute value back to this podcast by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction. So you get to say hi, hello, whatever you want to say about the podcast, or whatever you want to say in general, but Because it is a Lightning transaction, you are sending value back to this podcast in the form of Satoshis. And when you do send a boost, we read them on the next episode. And we have a boost to read today. And this boost comes from Leggy. Leggy sent 5,000 sats, and he was referring to last week. It was a boost on last week's episode. It says, "Hello, Chris. Hope you get well soon. My brother got his appendix removed 2 weeks ago, and I nearly died a decade ago because of it. I had something like a flu and stayed at home for 2 weeks, worked for 2 days, and got stomach pain. I didn't want to, but my wife forced me to go to the hospital where they kept me for the night. The next day, the pain was gone, and the doc from the station said it was probably just an infection. But then the old Shaffartz, the leading doc, Shaffartz said, because my blood shows signs of an infection, he will remove the appendix with a minimally invasive surgery with 3 small incisions. Well, it was already broken open and ended up with a foot-long scar. I'm pretty sure my wife and the old surgeon saved my life." Wow, that's pretty incredible, Leggy. That certainly sounds more dramatic than what I went through. And what a small world. I mean, I know appendicitis is pretty common, but for me to have appendicitis and your brother to have had appendicitis within a 2-week time frame, that really reminds you of just how small the world really is. And yes, appendicitis, if you've never had appendicitis or don't know what it is, that's when your appendix gets inflamed. And when it gets inflamed, it usually ruptures. And when it ruptures, because it's the bottom of your large intestine, you get all kinds of really nasty stuff in your abdomen, and then you get sepsis and you can die. In my case, it wasn't a full-on rupture. They said it was perforated when they did the CT scan. With me, I was a little different. They took they thought something else was wrong with me. They thought I was having a heart attack because my heart was acting really bad. Mine was a weird case. I wasn't presenting typically. I went in because I was thinking I was having an allergic reaction to something I ate. I was tachycardia, which basically means my heart was just beating too fast and it was beating irregularly. Short of breath. I had a really bad rash, and then I started having stomach pain. And it turns out that was just really weird symptoms of the fact that my appendix was oozing into my abdomen and starting to get infected as well. Just like you, Leggy, he told me I was going to get 3 little incisions, but he stuck to it. Before he wheeled me into surgery, he said that he had never had to fully cut someone open, even for a burst appendix, and I was not going to be his first. And he kept that, but he did go in a different spot where he said he was going to go. So on the completely in the opposite side of my body. So and then he said he had to irrigate it with like 2 liters or more of fluid to make sure I was good and cleaned out. And so far so good, because they did say there'd be about a 50-50 chance I'd end up with a post-surgical infection, and I wouldn't know for about a week. So here I am. It's been over a week, and I'm feeling pretty good. So hopefully that's the case. Leggy, I'm glad that worked out for you, because I, from firsthand experience, know that a burst appendix can be a death sentence, and would have been a death sentence to our ancestors. So that's pretty humbling. And one of the things that reminded me of when they were wheeling me off to surgery was I've always felt really, really comfortable with the way that I store my Bitcoin. I had a pretty bulletproof plan. I can dox it now because it doesn't exist anymore. But at the time, I had given one family member an envelope with really detailed instructions saying where my hardware wallets were, how to use those hardware wallets, what program to use to open them, etc. Everything they needed, but none of the passwords, none of the PIN numbers. And then I said, this other family member, if you tell them this clue, they will immediately know what my password is. They'll immediately know my PIN number. They'll immediately know my, and they would. I mean, it was something that was completely obvious. Like, this isn't what it was, but let's just say that, for an example, it would be as obvious as if you're married and the very first place you met your wife, like if you had some really funny memory, like you met your wife at a party somewhere and she spilled her wine on you and you actually punched her in the face and broke her jaw, kind of comic. If it was that, if it stuck that kind of impression in her head, and then your password was Bob's house or whatever, and that was Bob's house where the party was, and then you were just right on the sheet, hey, my password is that party where the house where whoever's house it was, I broke your jaw at. They're not going to freaking forget that. So that's not what it was, but it was something along those lines. But plebs, that's changed. I mean, I did that 10 years ago. And since then I've changed hardware wallet providers. I didn't like the hardware wallet. The hardware wallet that I was using it's still an okay hardware wallet, but not good enough for my purposes. And as the value of your Bitcoin grows, you do other things to take to make your holding a little more secure. So the point being, things have changed. And I'm thinking, fuck, I'm getting wheeled off to surgery. I'm probably going to be okay, but sometimes people don't come out of this. And so what happens to my Bitcoin? And, this was one of those like getting hit by a bus kind of things. It's not something you have planned out. It's just boom, you're here. And now in a few seconds, you're going to be unconscious and maybe not come back. And that's it. Either your Bitcoin is safe or your Bitcoin's lost forever and you don't have time. You don't have time to make any changes. So, as they were wheeling me, actually not as they're wheeling away, I waited till we were in private, and I relayed some instructions on how to change to my new updated setting and made sure that they had a walkthrough just in case I didn't make it. So, the last episode I entitled "What Doesn't Kill You Make You Stronger," and what it should have been titled is "What Doesn't Kill You Makes You Reassess Your Bitcoin Security," because plebs, tomorrow your appendix could explode and you may or may not come out of it. The anesthesiologist can accidentally kill you, even if it's just a minor surgery. And what happens to your Bitcoin if that's the case? So, I've got multiple gadgets that I've purchased over the years sitting in boxes in my shelf that different types of titanium plates and the metal washer, like the micro seed type things and things that I wanted to play with that I've just never gotten around to doing. I've got really good Bitcoin security and a really good plan laid out. Don't get me wrong, but there are probably things I could do to make it better. And there are probably things you can do to make it better too. And there are probably things that you could do right now that will make sure that you're just never in this position. So not to get back to it, not to dwell on the morbid, but that's sometimes things like this, it takes something like that to put that into perspective. So Leggy, thank you for the boost. Leggy, we gotta get together and have some beers at some point in time. We have so much in common. It's not even funny. And I appreciate that you're still there listening. And I appreciate that, that we shared something similar, even though yours was a long time ago, and that your brother's was 2 weeks ago and on the other side of an ocean. It really shows that regardless of who we are or where we are, there's some things that make us all the same. It's like the Blues Brothers line for the movie where they're doing the last concert at the very end and the cops are trying to get him. And he says, there are some things that make us all the same. You, me, them, point at the Illinois State Troopers, everybody. And those words couldn't be truer. And I found that is especially true when it comes to Bitcoiners. I have never met a Bitcoiner that I didn't immediately get along with. I mean, I've met Bitcoiners that I haven't necessarily said, hey, let's go hang out next week and drink beers with, but I've never met a Bitcoiner that I didn't just get along with, that we just didn't have a good time. And that's really cool. And Leggy, you are definitely at the top of the list of plebs that I hope to be able to sit down and have a beer with one day, even though I don't drink that often anymore. Plebs, our stats are a little Twitter-pated this week. I was trying to get our updated geographic distribution of listeners because we didn't get into it last Wednesday because I didn't have it. And I wanted to make sure we did it today. Normally we read our top 10 countries by listenership. And we're not going to do it again this week. And the reason we're not is because Spotify is making my statistics very, very difficult. I saw, for example, not last night, the day before, Saturday, I think it was, or Sunday, I think it was, a couple days ago, I saw a spike in real-time listens. I had something like 326 listens in the last 24 hours. I'm like, oh, that's cool. Normally my listens come in right after the podcast, Wednesday night, Thursday, maybe Friday, and then the weekends are kind of a lull. But here on the weekend, like 324 listens, boom, just like that. And so I was starting to see if I clicked on this episode and it had like no listens. I'm like, no listens? I've listened to it. There should be at least one. And I'm like, okay, that's weird. And so I scrolled down, like, where did these 320 listens today go to? And all of my listens were the same as the last time I had screenshotted them. So my stats aren't updating and I don't know what the problem is. And the stats, that's just the stats per episode. The stats for where who our listeners are. It says we have one listener and he's 53 years old. And that's it. And I know that's not the case because I listened and I'm not 53 years old. And I know my wife listened because she was just telling me about the podcast. And the last I checked, she's not a 53-year-old man either. Point being, the statistics are messed up. So I'm not going to read the top 10 countries this week, but thank you each and every one of you, regardless of where you are listening. We have listeners all over the world. The last couple of episodes, we had a few new countries break into the top 10, one of which was Iran, a country right now that is definitely, the Bitcoiners there are definitely in a world of hurt. That, there were issues with their money to begin with, but now, their country's at war. And so it's just flattering to know that people all over the world are listening to this podcast, especially in places where people really, really, really need Bitcoin. Hopefully listening to this podcast is at least entertaining or comforting to you, if not providing you with any ground shaking or, life altering brand new information. At least you feel it's worth your time. And the fact that people from all over the world apparently do, that is, like I use the term humbling and flattering over and over again, and it seems like it's cliche, but it is not. It is humbling because it makes you feel less important to realize that you're just one of 8 billion people and that we're all in this boat together. And then it's flattering because you chose to spend precious minutes of your time listening to me. So thank you to each and every one of you, regardless of where you may find yourself. Hopefully your family is safe. Hopefully you have food to eat and good health. All right, on to the news. Usually I lead off the news with the price because they say the price is the news and news is the price, and I'm not going to do that this week. This week I'm leading off with a Bitcoin fixes this headline. And that headline was yesterday. You may or may not have known this, but the U.S. Federal Reserve financial system went offline. Now, I don't know if this was because of all the cyber attacks related to the war going on in Iran, or whether they just screwed something up. But yesterday, the Federal Reserve Financial Services experienced a series of outages that affected critical payment systems, including ACH and Fedwire funds. According to StatusGator, there were multiple incidents. There was a major incident that lasted almost 3 hours, starting at 3:47 p.m., and then another incident that lasted for 4 hours and 55 minutes later that night at 9:02 p.m., with additional disruptions peppered throughout the day. These outages prevented your ability to send ACH transactions, wire transfers, or make other electronic payments. It impacted financial institutions up and down the chain and customers that rely on these services. Capital One and other banks, for example, reported transaction delays, with some customers receiving messages indicating the Federal Reserve was experiencing issues when they tried to access their money unsuccessfully. Lawrence Lepard, he is one of those gold bug boomers, but he spans the world between Bitcoin and gold really well. He sees gold for what it is, and he sees Bitcoin as its replacement, as the improvement of gold. All the reasons he liked gold and then better with Bitcoin. Well, he tweeted about this, retweeting a tweet from MacroEdge. MacroEdge had tweeted at the time saying the Federal Reserve was experiencing service disruption, blah, blah, blah. He simply retweeted it saying Bitcoin fixes this. And it does. Nothing can take down the Bitcoin network unless it took down the entire internet globally. As long as there's two nodes out there talking to each other, the Bitcoin network is alive and well. The Federal Reserve being hacked, any company in the world being hacked, any bank in the world being hacked cannot bring down the Bitcoin network. All right, now on to the price. And the big question that everybody was asking themselves was, does the bear market continue? Is the bear market over prematurely with the rally up to $72,000, $73,000, $74,000? Or are we going to see deeper lows and an extended bear market? I dedicated a large portion of a podcast 2 or 3 episodes ago, I think it was February 6th, to this. So almost exactly a month ago. And I spoke about the average Bitcoin cycle and how long the all-time high is after the halving, which works out to about 80,000 blocks. And then after the all-time high, how long is it before we start emerging from the bear market? And what that is, that's twofold. First, the bottom, you have to have the bottom. The bottom has to be in. And then you have that low slog, which feels more like a crab market as we approach the next halving, where Bitcoin is crawling its way back up, but rather unimpressively. But the point being, it doesn't go lower. We have the Bitcoin bear market bottoms out. And traditionally, the Bitcoin bear market bottoms out about 1 year after the all-time high. After the 2020 halving, for example, we saw an all-time high in December I'm sorry, after the 2012 halving, we saw an all-time high in December of 2013. And then the bear market didn't bottom until January 2015. That was almost exactly 13 months later. In 2016, that halving, we saw the all-time high in December of 2017. That was that $20,000 all-time high. And then we saw Bitcoin. Well, we saw Bitcoin do a lot of things. We saw Bitcoin for that bear market. It seemed like the magic number was 10,000. Bitcoin was above 10,000 and then under 10,000, then above 10,000, then under 10,000 until it had that final dump down to 3,000. And that dump, that low, that 3,000 mark, that happened almost exactly 1 year from the all-time high. Then, of course, in 2020, we had the November all-time, the 2020 halving, we had the November 2021 all-time high of $69,000. And then we had that low of around $15,000 in November of 2022. And that was about 12 months after the all-time high. So history tells us that 12 to 13 months after the all-time high is when we can expect the bear market to bottom. Now, history doesn't always repeat, but just looking back, it has thus point rhymed every time. So can this time be different? It's possible. Last time it was different in that until last time, a bear market had never gone below the previous all-time high. So we should have never seen Bitcoin go below $20,000. And it did. Now, granted, it took Terra Luna, it took BlockFi, it took FTX all collapsing for that to happen, but it did. It went below 20,000 to 15,000, and that was the first time that ever happened. So firsts can happen. Never say never when it comes to Bitcoin. But if I had to guess, Bitcoin has not seen the bottom. Even if it has, that's irrelevant, because anytime Bitcoin's below the current all-time high, the most recent all-time high, then Bitcoin is on sale, because as Adam Meister likes to say, Bitcoin will always return to the all-time high. Bitcoin always sets a new all-time high. Every halving, Bitcoin has gone on to set a brand new all-time high, blowing the previous one out of the water. And so at any point in history, if you had bought lower than the previous all-time high, well, the next cycle comes along and you're just doing really well. I guess what I'm trying to say is that regardless of how long this bear market lasts, it will not last forever. All right, there has been a lot of chatter on Twitter about leverage and about trying to time the market. There's a person out there that I'm not going to dox, but man, they're a Bitcoin influencer. They have a podcast, and it seems like every couple of weeks they're posting something completely freaking retarded on Twitter. I'm like, are you fucking kidding me? You're an influencer. You've been in Bitcoin since I think 2017 or 20 or whatever he said he was. Why the hell are you even considering margin, for example? But getting ahead of myself here, Monday on Jack Mallers' podcast, Jack Mallers is the CEO and founder of Strike. He was talking about his latest product that everybody's excited about. And that is, instead of just a traditional Bitcoin loan where, you put down $20,000 of the Bitcoin and he gives you $10,000 in loan, you get a line of credit. And you don't have to take that whole $10,000 out. You can use it as you need it. He was advocating using it to DCA into Bitcoin, and that by the time you would owe that money back, the interest you paid on the Bitcoin would be more than made up with by how much profit you made off of DCAing over a couple of years. And plebs, I don't know how many times to say this. Not financial advice. Don't fuck around and find out, man. None of us are master traders. And even if you were a master trader, those rules are out the window when it comes to Bitcoin. Bitcoin does not behave like a company. There aren't technicals. You don't know that this restaurant is opening new chains, or that its same store sales are increasing year over year, or they've just signed a lease on a really promising new oil field that is going to yield a certain number of thousand barrels a year forever. You just don't have any of that. You don't know what Bitcoin's going to do. We know Bitcoin runs in the 4-year cycles, but we didn't know precisely when that all-time high was going to be or what it was going to be. And we don't know precisely what the low is going to be. And everybody without fail that I know that gets ahead of themselves and tries to time the markets ends up with less Bitcoin than they had. Whether you're using Jack Mallers' product and taking a loan to do so or not, timing the market is usually bad news. Trying to time the market, that is. And taking a loan out, not just taking a loan. Taking a loan is one thing. Borrowing $1,000 on your house, something that a home equity loan that you're going to pay back, you're not going to be homeless, is one thing. This is a product where you're putting your Bitcoin on the line. You're taking 10 Bitcoin or whatever you're putting on the line, borrowing half of that value and hoping you make a profit. And if you don't, you risk losing that Bitcoin. Plebs, that's just horrific. And I can't believe we're actually seeing this sort of thing. And I can't see we're seeing influencers promoting this shit. I'm going to quote him without naming him. This person, for example, in this particular question is talking about MicroStrategy, not themselves, but he says, genuine question. Why doesn't MicroStrategy and Saylor not stack cash in the bull markets and buy during the bear markets? They would easily have 1 million Bitcoin if they had done that. In fiat terms, you don't get rich by buying the top. If you had bought the bear market in 2022, you're still up 400% today. If you bought the bull market, you were break even. You don't even have to time them perfectly. Why can't he not stack cash and then time his buys just a little bit better? Because, dude, nobody knows what the price of Bitcoin is going to be today. I mean, seriously, what the F? Remember Plan B last time around? Anybody remember Plan B in the stock to flow? Remember the sell the top and buy back at the halving nonsense that you were going to sell when it got to the top, when his stock to flow said the top was going to be, and then you were going to buy at the halving because it was going to be better? Well, let's look at this. His updated stock to flow cross asset model at the time was calling for a top of $288,000. Do you remember what the top was? The top was $69,000. So to refresh your memory, there's a big difference between 288 and 69. There were a lot of people, even if you said, okay, I'm going to sell at 150 instead of 288 because that's good enough. Plebs, we still didn't fucking get there. If you were relying on calling the top, you blew it bad last time around. Now let's talk about buying low. Well, what happened last time at the halving? Bitcoin was already at a new all-time high before the halving. So if you had sold at the top and called it, if you had sold perfectly at the top, if you called it, if you nailed it, if you said Plan B is wrong, we're going to top at exactly 69, and you sold at exactly 69 and then held on for the halving to buy back, well, you have less Bitcoin. Okay, so we've seen this story before. I don't know what more to say other than the fact that I know people do stupid things, but I'm seeing this from influencers with podcasts with 20, 30, 50,000 followers listening to them. And it just fucking irritates me. And it's not that it just, I'm not going to rag on this guy anymore because his opinion is his opinion. And we're all both saying no financial advice, right? I'm not giving you financial advice. He's not giving you financial advice, but timing the market is damn near impossible. Nobody has a crystal ball. We've already illustrated in the last couple of minutes how everybody that was believing in Plan B and his stock to flow model, and we're talking like actual, even Michael Saylor was quoting stock to flow. You saw stock to flow on MSNBC and CNBC. You saw financial talking heads talk about stock to flow. So really, really knowledgeable financial people putting their carrots, their eggs into that stock to flow basket, and it was freaking wrong. And plebs, that's why I'm saying keep it simple. The Chris principle, keep it simple, stupid. And that keeping it simple is a big portion of stay humble and stack sats. The staying humble part. It's the hardest part about staying humble and stacking sats. All of us can stack sats. Staying humble gets tricky. And I was used to people losing the staying humble part. You know, even the inventor of the stay humble stack sats phrase, you know, Matt Odell, when he was calling for 200K by conference day, you know, back when we had never even been above 100,000 before. So that part of losing the ability to stay humble, it was easy to see, you know, the euphoria, but this urge to leverage your Bitcoin and borrow money to go in leveraged, borrow money to gamble, to bet that you're going to be able to buy high and buy low and sell high is flabbergasting. Plebs, that's why I DCA and hodl. I'm not going to play any of these games, and I'm quite happy with the size of my stack as a result. Keep it simple. So speaking of staying the course and simply stacking relentlessly, and Michael Saylor teased us on Twitter or X yesterday with a tweet. Now, he didn't talk about his latest big buy for MicroStrategy, but he tweeted simply, "I'm buying Bitcoin right now. Are you?" Of course, that was before the price of Bitcoin rallied overnight. He followed up that tweet with another today posting, "We can buy more Bitcoin than they can sell." And that is true. Despite the bear market, Wall Street adoption is not slowing down, in addition to Michael Saylor, but traditional Wall Street adoption is not slowing down. Morgan Stanley, well, they've continued their rapid push to move aggressively into the Bitcoin space. Today, They filed an S1 registration with the U.S. Securities and Exchange Commission for the Morgan Stanley Bitcoin Trust, which is a proposed spot Bitcoin ETF. I know, just another Bitcoin ETF. But again, remember, this is another major player getting into the market. But in addition to filing for the ETF, they've also taken other moves that mean that they're getting serious about Bitcoin. For example, they authorized their 15,000 financial advisors to pitch Bitcoin ETFs like BlackRock's and Fidelity's to eligible clients. Previously, like Schwab, Morgan Stanley, and a few other large brokers were prohibiting their financial advisors to even recommend Bitcoin or Bitcoin products. They've also announced plans to allow their clients to trade Bitcoin on their E-Trade platform in the not too distant future, and they've invested in the Grayscale Bitcoin Trust, now holding $240 million worth of Bitcoin ETFs themselves. And also, they filed a national trust bank charter to enable Morgan Stanley to direct digital asset custody for their institutional clients. If this doesn't sound like a big deal to you, well, let's look at the numbers. Morgan Stanley is the 6th largest bank in the United States with $1.3 trillion in assets. That's almost as much as Bitcoin's entire market cap. Among publicly traded banks worldwide, Morgan Stanley is usually in the top 10 with roughly 270 billion in market value. But where they really dominate is investment banking, wealth management, and institutional trading. Morgan Stanley's wealth management division is one of the largest in the world with trillions in client assets. So Morgan Stanley's move into Bitcoin is a really big deal, and not just in terms of the numbers, but the terms in terms of stability, of Bitcoin's price stability as well. As we're already seeing this time around, institutions tend to have stronger hands than retailers do. In the past, we have seen retailers just dumping their Bitcoin and panicking at this stage of the bear market. Something we've not seen happen in large numbers with the big banks. But it isn't even the Wall Street money and traditional humans that we're talking about here. A couple of weeks ago, in the last couple episodes, in fact, we've spoken on multiple occasions about the future demand for Bitcoin and where it will come from, and how traditionally we think of that as first normies being orange pilled, and then of course the Wall Street banks like Morgan Stanley getting into Bitcoin, and then even the countries, the nation states becoming orange pilled, whether they have their strategic Bitcoin reserves or whether they adopt Bitcoin as their reserve currency. But I brought up something Andreas Antonopoulos was saying all the way back in 2017 when he was talking about micropayments. If you listen to the previous podcast, then you'll remember the analogy of your car sending Satoshis to the car ahead of you, maybe two sats or 3 sats, just to like move out of your way so that by the time you got there, if you were going faster, that lane would be clear and you could keep going, and then they'd just move back over after you passed. But instead of having to come up behind them and intimidate them out of the way or honk your horn or whatever, the cars would just do it automatically, and they'd be sending Satoshis back and forth to facilitate that. Well, this is the sort of thing that people are now rediscovering, something Andreas talked about 10 years ago, but what started making headlines and people talking about again with the latest AI advancements. We spoke a couple of podcasts ago about the Claude bots, for example, opening their own Bitcoin wallets without even being instructed to, and finding ways to fund those Bitcoin wallets so they could buy the real world things they need, even if they're just trading with other bots or maybe ordering from Amazon or whatever. They need a way to pay for things. So they were starting to use Bitcoin. David, who's at David English MBA on X, well, he tweeted about this on Friday. He posted, this is a long one. Actually, it's not that long. Bitcoin's next buyer isn't human, it's software. Banks want identities, accounts, approvals, and reversals. Software has none of that. Bitcoin doesn't care who you are. It can be verified by code and settled without permission. Demand shift is structural, from investors buying a narrative to machines holding an inventory so they can operate. When a fixed supply asset becomes working capital, the tradable float disappears. Then the market clears the only way it can. Price moves until someone sells. Many times we've broken down, and a lot of people have spoken about this, that said, if Bitcoin were to be distributed evenly amongst all 8 billion people in the world, there'd only be 250,000 Satoshis per person. Plebs, that doesn't include the computers, the bots, the algorithms that are all going to need and want Bitcoin. They'll be using Bitcoin on a daily basis. That's just mind-boggling, because sure, we know how many billion people are on the earth, but it's conceivable that robots, bots AI agents will outnumber people. So all of a sudden, instead of 250,000 sats per person, there's maybe 100,000 sats per entity. That's pretty incredible because Bitcoin can go to the moon even without human adoption. And the robots, the bots, the plebs, the clod bots, they're already figuring that out. And that's pretty incredible. That's something a lot of people haven't given a lot of thought to. So buckle up, man. It's another way we're still early. The bots are just barely here. I'm going to wrap the news section with a tweet from Felipe Mu. He's at Felipe Crate on X. This is the long one. I hate to sound like a fucking victim when I write about this, but it's too close to my heart to care. Bitcoin is designed to be a tool against tyranny. It's not a Ponzi scheme. It's not controlled by Epstein and his deranged buddies. Satoshi built Bitcoin because he saw we were being silently oppressed. Oppressed by a few men with the power to create free money. Free money, 99,999% of the people never get access to. That's fucked up. It's not fair. Our God-given time and energy is being stolen from us, and we're being bombarded with propaganda waves to keep us from the truth. Fuck them. Bitcoin is money nobody controls. Money with a captioned supply, a supply that's easy to verify. When I say I'm a Bitcoiner, this is what I mean. I want to see a world where money is fair, where people's time and energy is easily stored into the future. How much is that to ask? Thanks to Bitcoin, we no longer need governments. We no longer need central banks. All we need is money worth working for, and now we have it. Rant over. I couldn't agree more, and this section of the podcast is over too. So as he said, all we need is Bitcoin, and we're going to grow our stack. Actually, we already have grown our stack because we automated our DCA many, many weeks ago. But it's time to move on to what makes today and every Wednesday special, and that is that Wednesday is DCA Wednesday. What is DCA, you might ask? Well, DCA is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. The exact opposite of that nonsense that those influencers I was ranting about were talking about just a few minutes ago, where they're saying, save your money and just buy it all when the price of Bitcoin crashes. But I digress. For our purposes, we set our equal portion, the first part of DCA, at just $20 US. I did this because I wanted to show that even if you could only afford to put away just $20 a week, that it would eventually make a difference. And that by extension, we are not too late. Even if you only have $20, it's not too late. And of course, there are still those who think that you have to buy a whole Bitcoin to get started. And I wanted to show that that was also nonsense. What better way than to rack up a decent size of Bitcoin with purchasing just $20 at a time? And I chose weekly for our regular interval, the second half of the equation. Once weekly on Wednesdays to be specific because, well, that works really well for a weekly podcast, but also because most people I know that have regular jobs, well, they get paid either once a week or every other week, depending on their fiat mining job. But as usual, the $20 interval and the $20, the amount and the interval, whether it's weekly, monthly, daily, whatever, those are you do you things. Pick an amount that you feel comfortable putting away and forgetting about for a minimum of 4 years, preferably at least 10 or longer, and do so consistently on a timeline that is feasible for you, one that you can maintain regularly. Plebs, today marks our 241st DCA Wednesday. We started almost 5 years ago, back on Wednesday, July 28th, 2021. And so far, we've stacked every Wednesday since then, which means we have so far stacked 240 times. And in those 240 Wednesdays, we converted now a total of $4,800 US into a stack of more than 0.1 Bitcoin. 11,494,937 sats to be specific. There are 100 million Satoshis in a Bitcoin, so 11,494,000 sats is 0.11494,937 Bitcoin, for those of you who like to think in nice, round, whole Bitcoin numbers. Perhaps almost as importantly, by not trying to time the market, by not trying to sell the top and buy the bottom, we've managed to stack that Bitcoin with an average cost basis of $41,757.51. And think about that. If $20 is all you've put away for your future, all you have to put away for your future, all of a sudden $4,800 is a lot of money. I mean, That just shows the power of time and consistency. Time moves mountains, and it also shows the power of not trying to time your investments, because $41,757.50 is substantially cheaper than Bitcoin's current price. And we got there at a rather enviable position by precisely not trying to time the markets. All right, so we've already made that stack. As I mentioned, our stack is now automated. It happens automatically every Wednesday, and it probably did so a little more expensive than Bitcoin's current price, because we're stacking about 4 hours after the automated DCA purchase. And I know I said Bitcoin was closer to 74,000 earlier this afternoon. Hopefully we didn't buy that high. So what did we do? All right, we purchased, well, Bitcoin is a little more expensive. It was $73,426.83. So not as bad as 74,000, but a little bit more expensive Bitcoin's current price. But perhaps as importantly, or more importantly, that $20 at $73,426.83 means we purchased 27,238 Satoshis. And that does two things. It brings our stack up now to more than 1.115 Bitcoin, 11,522,175 sats. And it does increase that average purchase price a bit, because obviously we paid more than $41,000 for the Bitcoin. So it raised our average purchase price by about $75. Our average cost basis is now $41,832.28. But plebs, that is still highly enviable compared to Bitcoin's current price. The only way that average cost basis will go down, obviously, is if the price of Bitcoin is lower than $41,000 when we buy it. Since the price of Bitcoin tends to go up and to the right over time, that average cost basis will go up and to the right as well. But obviously, it should stay lower than the price of Bitcoin if this trend continues to pay out. But we're not, we didn't buy this Bitcoin so we could turn around and dump it today. We bought this because we want to pass generational wealth down to our ancestors, our children, our grandchildren, etc. Along those lines, we're just getting started. Just getting started, but we've only been plunking bits of Bitcoin away for less than 5 years now. And really, like I said, you need to be planning on doing this for a minimum 10 years. Nonetheless, when Bitcoin reclaims that $100,000 mark, not even setting a new all-time high, but just going back above 100,000, our current stack will be worth $11,522.17. Not too shabby for an investment of just $4,820. When Bitcoin goes to 1 million, which I think is a lot of people's moon currently. I mean, a few years ago, 100,000 was the moon. But a few years before that, 10,000 was the moon. But I think generically, most people are out there right now, they think when they say Bitcoin going to the moon, their moon is probably around 1 million. When, not if, but when Bitcoin does go to 1 million, our current stack, even if we don't add another penny, another single Satoshi to the stack, will be worth $115,221.75. That's not Michael Saylor money, but most people in the United States don't even have enough money saved up to cover a single emergency, a car accident or a hospital bill. The average American has less than $500 in their savings. If you've been following along with us, you will have more than $115,000 worth of Bitcoin saved up. Of course, Bitcoin's not going to stop there. One day, Bitcoin will hit $10 million or more. And of course, those are the words of not just me, but OG cypherpunk Adam Back, who's quoted in the white paper when he said back in 2022 that he believes by Bitcoin's sixth halving in the year 2032, one Bitcoin will be worth more than $10 million. Plebs, when that happens, our current humble stack will be worth more than $1 million US, $1,152,217.50. See where this is going? Of course, if we hit hyper Bitcoinization, Bitcoin's going to go way higher than 10 million. That's the numbers we're talking about here. Adam Back probably wasn't even factoring in the bots needing Bitcoin. We were just talking about if the entire world were using Bitcoin, that, we'd go to over 1 billion. And that was well before we found out that cloud bots were going to be competing with us for that stack. But who can forget Fidelity Investments, their director of global macro, Jurian Timmer, back in 2022. Well, they predicted that one Bitcoin will be worth 1 billion with a B US dollars by the year 2038. Plebs, that's only 12 years from now, not a lifetime from now. That's if you're in your 20s, let's say you're 25, So 12 years from now, you're only 37. We're not talking your old age. If you're 40 right now, that means that you'd only be 52. If you're 60, that means you'd only be 67. That's retirement age for most people in the United States, theoretically. And how would an extra $115,221,750 affect that retirement? Well, if Bitcoin hits $1 billion of the B, and you've been stacking alongside us only $20 a week for the last 4.5 years, your current stack when Bitcoin hits $1 billion will be worth that $115,221,750 US dollars. That is the life-changing money that we're talking about when we talk about securing your generation's financial future. Not too shabby, considering that we've stacked just $4,820 US dollars into Bitcoin. If you have been stacking more than $20 a week, you're doing even better. Before I wrap, I once again want to extend a warm welcome to all of our brand new listeners. Again, it is truly humbling and flattering that so many of you from all over the world are joining us on the Bitcoin Bulletin Podcast every week. If you've just recently begun listening, one way you can help get this podcast in front of as many people as possible is simply to make sure that you're following this podcast on one or more of your favorite podcast apps. And of course, that you have automatic downloads enabled. That boosts us in the algorithm that they use to determine who sees the Bitcoin Bulletin Podcast in their search results. And of course, automatic downloads also mean you will see our latest episodes in your latest episode list as soon as they become available. It also means you won't have any interruptions listening due to spotty Wi-Fi or cellular data when you're traveling, for example. Another way you can help others find our content is by making sure you're following the podcast on Twitter or X. There we are at BTC Bulletin Pod. That's the letters BTC Bulletin and then pod, as in short for podcast, at BTC Bulletin Pod. Of course, that's also in the show notes if you just scroll down. Finally, I want to remind you to maintain that time preference. Remember why you are here. There is a lot of fear out there still on Bitcoin, Twitter, etc., even though the price is up a little bit. And especially if this is your first cycle, if you're just getting started, especially if you just stack near the top for the very first time, it's undeniably stressful watching your paper gains disappear. And quite frankly, even for me, it's still stressful, even after multiple cycles, because it's just human nature. You're watching the fiat value of your stack go up. You're like, hey, I'm rich. And then it crashes. You're like, hey, I'm not rich anymore. And it can be more nerve-wracking as the number of sats go up. Instead of having $1,000 and watching it go to 500, you have 100,000 watching it go to 50, or 1 million watching it go to 200,000. Just human nature. So one way you can maintain that strong hand is by remembering why you're here. This isn't a get rich quick scheme. This is a don't go slow poorly scheme, and it's a don't miss out on the future scheme. Of course, there's no way to completely stamp out worry, but again, if you remember why you're here, that Bitcoin represents hope for billions of people in addition to you and your family. That Bitcoin will be the reason why your family is better off in times of crisis. Hopefully, if you're in a place that's in crisis right now, you already have Bitcoin. It's already making that difference for you. And that Bitcoin is ultimately unstoppable. And if you remember that, at least it should be a little easier, to maintain that strong-handed conviction. In the meantime, plebs, I will see you next week while we continue building our shiny orange future together. But until that time, keep on stacking those sats, you sexy sat stackers.